presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all your information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, Ben.
Again.
Thank you.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We finally got the cameras back on. I hope you all had a fantastic weekend. Quite an interesting day, of course. Tariffs seem like they've been averted, at least for Mexico. I believe Trump is in discussion again with Trudeau right now. Honestly, this was a relatively resilient market, I would say, all things considered, especially, threatening a just flat tariff of 25%, of course, on both Canada and Mexico, 10% on China. Of course, I also think what's going on is you have a bunch of people who are from around the world who are dumping money in to the American market as well, which kind of can offset that, right? I mean, why not, right? If they're all considered that, if they're all concerned rather that their markets are going to collapse under kind of similar conditions, why would you not place some money into the U.S. market? Some of the stuff that's kind of interesting, I want to talk about with Canada for a little bit. Regarding the tariffs, so regardless of what happens, I think we're keeping tariffs most likely on lumber. And this is a really unique, as an interesting rabbit hole I went into this weekend, really last night. And it's about the U.S.-Canadian softwood lumber just conflict we've been having since the 80s, right? And so while, like I said, I don't believe that there will be a flat 25% tax, or tariff rather, on Canada, I do think some key sectors are going to get hit, namely softwood lumber. And again, this has been going on. So essentially what happens is the Canadian government really owns a lot of the lumber, right? And they subsidize the stumpage fees, that is to cut the wood down. We really don't like this, of course, because we try to do free market dynamics. At least our lumber production is privatized. And so this can kind of screw up our lumber providers. So starting, I think, in the 80s, they had something called, countervailing duties, which is just meant to offset the subsidies, right? Canada very much did not like this and didn't agree with it. And I almost agree with them from a legal perspective, right? Because as the law says, and this is the agreement that we all reach, right? When you do trade with other countries, everyone needs to respect each other's kind of trade regulations. Countervailing duties can only be placed, at least this is how it's working with the lumber and has been, on commodities that are used within a specific industry. And that is quite clearly not applicable to softwood lumber. I mean, you could use it in any industry that you want, and it is. And so you've had this kind of trade battle that's been going on for quite a while, and it escalated in August of last year, 2024, when Joe Biden raised the duty from 8% to, I believe, something like 14.8%, which is quite an insane increase. And so as far as things with Trump are concerned, this is not a 0% no tariff thing. We're raising it up 25%. He might be doubling it roughly. I mean, maybe like 70% increase from the current rate. But I don't see him really giving on that, right? Even if all the other tariffs don't get applied. So this is something really interesting. I had no idea about this whatsoever. I mean, I think if you had just been watching the news, you would have thought everything was totally fine and we're importing this lumber with no duties imposed on it. And that's just not the case. So I really recommend, researching some more if these tariffs come to pass, right? Researching what the current rates are, why they are the way that they are, and can maybe probably give you a better insight into what actually will receive these kind of tariffs. I thought that was super fascinating. I had no idea. So we'll see what happens with Canada. It seems that the tariff imposition was deferred on Mexico until about a month from now. Mexico is putting 10,000 National Guards on their border. Of course, the whole, at least public conversation around this is to try to stymie the flow of fentanyl into the U.S. So, I don't know. Man, interesting times. There are years when nothing happens, and there's weeks where years happen, you know? Forget who said that. Let's take a look right now on the SPY. You're off about 0.44%, and this is a pretty decent movement to the upside throughout today, right? I mean, if I can get back here, you know, you get some nice movement, some hot to the upside when this market opened, and then you close, or you settle lower than where you were prior, and then really just some pretty stellar buying to the upside. I believe that was probably on the communication about Mexico, and then we've stayed really consolidated for quite a while, up until about 140, and now we're moving even higher, and we keep kissing that 600 level, still at 599.11. What I still think is a little bit weird with the SPY itself is that you've been trying to make back to all-time highs after these. We've had, you know, 2 large gap downs now. One with DeepSeek and, you know, potentially the yen trade, the yen carry trade blowing up, and then of course with tariffs over the weekend. And it has not gained the steam to get back up to all-time highs, and that makes me a little bit hesitant to say, all right, this bull rally's still going. We're going to make all-time highs, you know, no matter what. I don't necessarily see a huge blowdown in the SPY, but I can see some anticipation, at least for sideways movement. You know, I think that people are still not sure what the heck Trump is going to do. I think that's putting fear in the market. The only thing I believe that's floating this in a major way is that other, you know, nations essentially are buying in here. You know, so that is really something to consider. And it makes me nervous. You know, some of the bigger guys, I mean, we're going to talk about NVIDIA a little bit. We're certainly going to talk about Tesla as well. I mean, Tesla's in a bad way right now. But NVIDIA still off about 2%. Obviously, you've had some recovery since the open, but, you know, that is lagging behind the SPX itself. So that's something to consider. I think this is a perfect moment for some of this capital that has been just ham-fisted into the Magnificent Seven to come back out from it, okay? I think people are still, I mean, what you saw yesterday with everything selling off, even gold, I know gold is doing quite well right now, trading at 2,858, just a little bit off its lows, but I mean, you had a sell-off last night, right? Around 9, 10 o'clock, and this is fear of liquidity, right? Or fear of illiquidity, rather, right? So, I mean, you get tariffs imposed in a flat rate, I mean, that creates illiquidity. So people are trying to get cash heavy. They said, okay, maybe this is not such a big deal. Of course, you have a lot of interesting stuff going on with gold, of course, leaving from London, going into New York. There's an arbitrage opportunity there. If of course, the tariffs were imposed on gold, I'm not sure if they will be, and then what happens if that's not the case. Probably nothing. They probably won't move them back until there's some other kind of disparity between prices between those two locations. Folks, please stay right there. We're going to be right back with Steve Rhodes, Mastering Probability, right after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. It is Monday, and that means we are joined by Steve Rhodes. Steve Rhodes is the author of the Mastering Probability newsletter. He also hosts the Trader's Edge live on TFNN 11 a.m. Eastern Time every day that the market is open. Really recommend checking out the Mastering Probability newsletter by Steve Rhodes. Of course, we love having him come on. He has a very unique analysis that I think gives us a better understanding of everything going on. And I personally feel like a lot of traders don't look at the kind of stuff that he looks like, which is really to their detriment. So I recommend checking out Mastering Probability. Again, if you've never tried out this newsletter, you can do so risk-free for 30 days. We have a 30-day money-back guarantee if for whatever reason it doesn't work out for you, but we are betting that it will. Steve, how are you doing? Okay, we're gonna get Steve Rhodes back on. I can hear you, Steve.
Hello. Yeah.
Hello.
Okay.
Hello.
Good.
Fantastic.
Yeah.
How you doing, Steve?
Good. I'm doing well. Yourself?
I am doing well. Quite an interesting market today. I tried to get in a little bit earlier, and I got burned. So I moved out very quickly. I'm gonna wait for this kind of chop to finish up. At least that's my approach right now. So.
Got it. So, you know what I thought I could do today? I don't have a ton prepared. Sure. But what I do have prepared, I think, is very valuable to our listener base. And that is, you know, Friday, late morning, early afternoon, we had a nice rally going inside the markets. And then I think the communications came out that Trump was going to, put on tariffs to Mexico, Canada, and in China out there. And then the markets began to sell off. So it was no surprise when the chatter picked up yesterday about the tariffs are going into place out there that equity markets gapped to the downside. But what did it mean? Right. What I mean by that, Jacob, is I had a number of people reach out to me asking me, was this the beginning of the end? Mm-hmm. Should I just simply sell everything out there? And for me, trying to answer those questions really says we need to understand what the technical patterns are telling us here. And so when and at that stage, I still wasn't back to my house. But when I finally got back here late last night, I don't remember the exact time, 7:38, whatever time it was, and opened up my charts, and I realized what happened. Well, first thing I did was I opened up my equity future charts, and that's what I've actually got up on my screen right now. And they're the 30-minute time frame charts for the ES, the NQ. So it's the S&P, the NASDAQ 100, the Dow in the lower left, and the Russell 2000 lower right. And what I notice, one of the patterns you hear me speak about all the time is the TD9 count pattern. Yeah. It's an easy pattern to learn. I teach it to everyone. It provides us with a breakout, an objective breakout level where price broke out from, which can be a buy point. It identifies a breakdown level where price is likely to reach and then perhaps turn down out there. But what was important, and if you take a look at the blue arrows, a TD9 count, the bottom's got to form is going to form on either low of the bar 8, bar 9, or the bar following bar number 9. In the case of the ES Mini, it was the bar following bar number 9. In the case of the NQ, it was the bar following bar number 9. In the case of the Dow equity future contract, it was bar number 9 because the bar following bar number 9 never got below that low. That was the low of the pattern. Same thing for the Russell 2000. If you take a look at the Russell 2000, that was the low of the day. So where people instinctively, as futures are gapping to the downside, and it would be instinctively to ask that question. Now, look, I asked that question myself.
Right.
When I looked at my phone, saw what futures were doing, but I knew I didn't have the answer. I knew I couldn't look at my phone, determine, if futures were down 400 or 500 points, what that actually meant. And so, it was nice for me to be able to get back to these folks and say, hey, look, you got TD9 count bottom patterns out here for these four equity, for these four contracts. Each of these individuals were more interested in the NASDAQ than anything else. And so I said, hey, here's the bottom. I didn't provide the price point out there, but you could easily see what the low of the day was. I said, look, your price starts trading below that, markers are going to head lower. They never did. In the case of the NQ, in the case of the ES Mini, it did after a few hours, but then that went on and formed this little Rhodes Momentum Indicator bottom pattern out there. The Dow equity future contract, it also started to move a bit lower, but it also formed that Rhodes Momentum Indicator bottom pattern. The point is that I just want to share with folks that what we do here, it's really for us to be able to interpret the message of the markets and what's being communicated to us. And nothing. The worst thing to do is to act out of fear, right?
Absolutely.
People typically make very poor decisions.
Yes.
Myself, for sure, when you make a decision out of fear, right? You got all the wrong juices running through your system.
That's right.
Out there, and usually usually fear is what is false evidence appearing real.
I like that. Okay? I like that framing of it. Absolutely.
However, there is the opposite side of that, which is F everything and run. Okay, so I understand that when you see futures gapping down like that, as a stampede, do I need to? So I wanted to be able to share this, and this would be a real good reason for people to, if they've never subscribed to the newsletter, to give it a shot for 30 days and to be able to bring this knowledge. Knowledge is power out there. If we take a look at the daily equity future contracts, and these charts are all included with the newsletters, whether it's my daily newsletter, the evening newsletter, so even on a weekend. You can easily go back to your archives and you can take a look at these different levels and understand what was going on. When I looked at the daily time frame, I was like, wow, those TD9 counts really have a chance of holding. Why was that? The ES Mini was testing its swing point from January 27th. It had already tested and rejected it by the time I got to my charts. It was the same thing in the case of the NQ. It was testing the top of its swing point from January 13th. It had already tested and rejected. It didn't tell me whether price was going to reject it throughout the rest of the day. But at that stage, we'd already seen that a test and rejection. In the case of the Russell 2000, as an example, it was testing its a wave number 7 bottom, its Rhodes Momentum Indicator bottom. It was a bullish hammer candle. It was testing the high of that swing point. Now, I don't have the volumes on these here just yet, and if it's high volume, we'll get down there and we'll test those again. But the point is that the information contained inside of the Mastering Probability newsletter allowed people, if they wanted to go back and take a look at it, to understand the data and understand where their positions or what was going on inside the futures market. You don't have to trade the futures, but I provide you with that information so that you go back and understand what is really going on here. Here's the chart for the index ETFs and their profiles. And at this stage here, we can see that nothing is broken. What I mean by nothing is broken, nothing's trading below the bottom of a profile. And the bottom of a profile is support. Now, the SPYs are basically trading 24 hours a day, as are the Qs. So you can get really great information from your brokers as the equity futures are trading lower. Where are they trading? Well, I also provide this table. You're familiar with this table.
Oh, yeah.
This this table shows you what the index ETFs, and everybody's got these on their charts, whether it's the SPYs, the Qs, the Diamonds, and the IWM, or each of the 11 sectors inside of the S&P 500. And each morning and each evening, this data table is provided. It provides you with the tops of the profiles, whether it's the daily top or the bottom of the profile, whether it's daily, weekly, or monthly time frame, as well as it provide the oscillator and change zone, which I'm not going to really get into at this stage here. The point is that the information in the letter itself pays for itself. This is, you go out and purchase these profiles, and I recommend it, especially if you're an active trader out there. Yep. But I provide you with a lot of this information for you to understand, for people to understand what's going on. I also provide, these are the daily, the top row is the daily, bottom row is the weekly equity future charts, so you can easily see what profile levels are there. I provide this table at the end of every day. This is, and it's got the top 10 instruments for the Dow, for the S&P, for the NASDAQ, for the Russell, basically everything what we primarily talk about here. And I see we're about to head to break. We can, if you want, we can come back.
Absolutely. Yeah, please, Steve. Stay right there. Folks, we'll be right back with Steve Rhodes right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. I am joined right now by Steve Rhodes. Steve is the author of Mastering Probability newsletter. He's also the host of The Trader's Edge on TFNN, 11 a.m. Eastern Time. Every day the market is open. Steve, before we went to the break, we were taking a look at this fantastic table. And folks, this is what I'm talking about. I mean, the amount of like supplementary material that you get with Mastering Probability is unreal, right? I mean, these are massive value added. Really recommend checking out this newsletter. Again, you could do so 30 days, money back guarantee. If for whatever reason it doesn't work out for you, we're really betting that it will. Steve, let's take a look kind of at this table that you're looking at right now.
Yeah, and so this table is taking a look at the top 10 instruments, as I mentioned, from the primary four indices, the S&P, the Dow, the NASDAQ 100, and the Russell 2000. Now, some of those instruments are contained in both, so I keep little notes as to where to look for them. But it covers all of that, which is about 80% of what most of our listeners are invested in or taking a look at. And so, for example, I also am providing support. It's really all about understanding support and resistance. If a pullback is just pulling back to support, nothing's broken. You may not like it, right, because you've lost a little bit of bread, at least inside your account if you were to sell it. But markets don't move in just one direction, either to the upside or to the downside. What we want to know is price broken support or is price broken through resistance, if you're headed to the upside. And what I provide on this chart, in addition to all that information, is what's the daily outlook. So if you were to take my set of tools out there, all of this is automatically generated, so it follows specific rules. It's not Stevie saying, well, maybe it's totally objective. And so take example, I'm going to look at Microsoft. The highlight in yellow doesn't mean anything, just says it was trading at that moment in time. But if you look at the monthly outlook, it's in a consolidating bull. It tells me so you already know it's bullish. The consolidation period aspect is in between profile levels out there. If you look at the weekly time frame, we're in a consolidating bull, so there's nothing busted here. But when we look at the daily time frame, we're in a breakdown bear. And that means that for somebody, for example, that was looking to add to their portfolio in Microsoft, they would see, okay, on a daily time frame, prices moving lower. They either reach back out to me or they wait for some kind of bottoming signal. We're only in bar number 3 to the downside in its TD9 count pattern out there. There's no Rhodes momentum indicator bottom signal. There's no Chapman wave number 7, which we would use. So there's nothing out here. There's just support and resistance for people to observe. So it's really kind of like a portfolio checker. So to speak. Sure. And this is just, we've only shared one. I show the Dow 30, I show the IBD 50, the IBD 20. I have 2 sample portfolios to manage longer term accounts, your 401ks or what have you, that are separated between international accounts, U.S., and so forth. So just really a ton of great information to help you assess what's going on with your instruments and what's going on with the market sometimes, like last evening. The euro almost made a new all-time high today in the Dow. I mean, missed it by a smidgen. If we, I'm sure if we had, we're taking a quiz on that. Yeah. And not necessarily the people that listen in on this show, because they do know that I take a look at how markets are trading in different currencies. People would have said, no way. It missed it literally by a smidgen. Yeah. It still might get there. If the Dow is still rallying out here. So this just takes a look at how the markets are trading in major currencies. But the most important thing that I wanted to be able to share with you is the tools. For example, if you go back to last night and the market's gapping down, what did that mean? And that it was just simply, at least at that stage, it was TD9 count bottoms for these instruments out there. It should have or could have or would have made you feel just a little bit better about understanding the market. At least not saying I should jump off the building, so to speak out there. So I think that's extremely helpful for folks. I know you had mentioned Tesla. Yeah. Is one of the stocks that you're interested in. And if we look at the Tesla charts out here, so this is really, I like to look at the daily, the weekly, and the monthly time frame. Now, the bottom portion of these charts out here, these show consecutive closes in either direction. To the upside are black digits, to the downside would be red digits. So you've got it for the daily, the weekly, and the monthly time frame. The markets make these little dance steps out here, to the upside or to the downside. And so that's also helpful. Typically, we'll see, let's say in a market that's going to move to the downside, you will typically only see 2-day rallies or 2-week rallies if it's a counter trend, or in a monthly you'll see them at typically periods of 2 to 4. Now there's a number of candles that you see out there that don't have marks on. Those are just 1-day wonders to the upside or the downside. We're looking for those consecutive type moves out there. So in the case of Tesla on a daily time frame, if somebody was thinking to the downside out here, take a look at each of the rallies since we formed a high back out here on December 18th. Each rally has only lasted for 2 consecutive days.
Right.
Friday was day number 2 out there. So it says, hey, time to be careful. Now, in the case of Tesla right now, it's trading below the bottom of its daily profile, which is 389.29. It's trading into a swing point back here from the trading day of January 2nd. Now, obviously, a holiday shortened trade, volume.
Sure.
There was 109 million shares traded that day. Today, we're moving into it with 78 million. So that was a holiday time period. We're moving into it today. Today's no holiday, right? And it's moving into that swing point with lighter volume. Now, it hasn't tested or rejected it. We're still inside that swing point. So it hasn't given us an information like Tom would say, if you can't bust them to the downside, you try to bust them to the upside. Clearly, it hasn't busted them to the downside, but we're still inside that day's candle. So it hasn't really released the information, the full set of information that one would make. But it is trading below profile support. And if it does close below that low, the low I'm referring to is the one from January 2nd, and that was at 373.04. Price should then come back and get to its breakout level. I mentioned those TD9 count patterns out there. They provide us objective levels of support or resistance. On my charts, their red horizontal lines are the TD9 count support levels. So the next move to the downside on a daily chart would be at 348.28, 348.20. Then the nice thing about having a daily picture, a weekly picture, and a monthly picture, your eyes can easily gravitate over to them. And you need to be aware of the levels of support or resistance for those different time frames, because if we're breaking through a support on a daily level, where's the next support on the weekly? Yes. Well, it turns out the next support on the weekly would be its buy zone, and the buy zone established by these TAS market profiles. The TAS market profiles at the bottom, which at 327.15, provides us with support. At the top, which is where sellers are at, where the resistance is at, 452.68. The center is where both buyers and sellers believe there's fair value. If that line is closer to the bottom, which in this case it is for the weekly time frame, it tells us we have more buyers lined up between 327.15 and 345 than anywhere else within inside that range. So that becomes the buy zone. So if price is going to move to 348.20, and we don't know whether it will or won't just yet in Tesla, the next area or the buy zone would be between 327 and 345. So that's how these charts work out there. I thought I'd just share that with you and the listeners.
Fantastic. Steve, thank you so much. We'll see you tomorrow, 11 a.m.
You bet. Take care.
Take care, Steve. Folks, stay right there. We'll be right back right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We were just joined by Steve Rhodes. Really, just another fantastic analysis from Steve. Strongly recommend checking out the excerpt we're going to have for you on our YouTube channel, Tiger Financial News Network, at the end of the day. If you decide to do that, please consider liking the video. Please consider subscribing. It helps us out immensely. And again, you can check out the Mastering Probability newsletter by Steve Rhodes. Again, this is what I think is one of the biggest benefits about working for TFNN is that I get access to all of these letters and I get to just read through those in the morning, kind of look at my own stuff that I do. And it's nice just kind of checking your thoughts against, a bunch of experts on it. I find it really awesome. Tesla. So, obviously, Steve was talking about it. I'm starting to really get really bearish on Tesla. This has not been recovering with the rest of the market today. You can even see from the daily where everything else. Give me a second if I can get there. Very similar bottoming pattern around. Well, let's see, like right at the beginning. If I can get over here. Excuse me, not bottoming pattern. Similar blow up to the upside. And it tries to get higher, and it just can't. And now we're slowly decaying throughout the day. Another bump around that 140 mark, and then we're coming right back down as it is. This is a nice bar to the downside there. Now, not a ton of volume, as Steve was kind of saying, but if you look at it as it stands now, I think this will shape up to have somewhat significant volume, at least, going into earnings and stuff. I don't think the argument is here for Tesla anymore. Beyond just like the technicals and stuff like that. I just don't think it's there. You've had massive contraction in sales. You had sales drop 12% in California. This is something to keep in mind. Euro sales came out, and they are in a world of hurt. Let me see here if we can get it. And this is for January, right? So, for January 25 to 24, the UK, you had a change of negative 18.2%. In France, you had a contraction of 63.4%. Netherlands, contraction of 42%. Norway, contraction of 40%. Spain, a contraction of 75%. Sweden, 46%. Denmark, 40%. Portugal, 31%. It has a total contraction in those countries in Europe of 47.7%. I don't think Germany has come out yet, but listen, that's going to be really bad for them. There's no way that the numbers are any better in Germany. And then going forward, they're certainly not going to be any better in Germany. If we tariff, autos in Canada, they're certainly going to tariff Tesla back. They are ripping out Starlink, which is insane, but they also are paying Starlink to help launch their new satellite, at least in Canada, which is kind of interesting, but you got to do with what you have. I don't like it. And what I would say as well is, and I know people are a little bit iffy on this way of looking at some stuff, but I use it as a small portion of what I decide I want to do. But what is the general kind of like just retail sentiment on it, right? And you can get these by going to everything online, right? You can just see what people are talking about, type in Tesla as a keyword, see what people are saying. Obviously, you have to filter through bots if that occurs, but, 1 second, sorry. I have an Amber Alert going off. You have to filter through some stuff with that, but I mean, the exuberant buy the dip, I'm loading up right here is not happening. You know, I think retail might have been terrified by what just happened overnight. I mean, how do you manage something like that? We're breaking down even lower, really. You know, you're 380, 288 right now. I don't think that the full self-driving is going to come about in June. Even if they do have it, you know, I think it's going to be in a really small area in Austin. I don't know what the regulatory, you know, kind of environment is for allowing these things to operate on every street in America, right? Again, you have to figure out stuff with insurance, just general, you know, traffic laws. So I think that's a big barrier for unsupervised self-driving, in the sense of like, you know, ride sharing and stuff like that, to get off the ground. And I mean, Tesla bots is not, in my opinion, going to materialize, I think, in the way that he anticipates. I think the future is automation and robotics in some capacity. I think that just makes sense. But I mean, 10 trillion by 2030, I'm not sure that makes any sense at all. And I'm not sure what he'd be going off of with that. Anyways, that's kind of my thing with Tesla. I mean, I think over the next, you know, 3 months, 4 months, I mean, this can get back down to where it was before this massive Trump rally. Because, you know, had the numbers been better on this, it might have been able to sustain these levels. But I mean, it's looking weak, right? Right now, I think this is some of this excess liquidity that got pumped into it kind of coming back out. I mean, I would assume this is a lot of like, you know, industry investors doing this. I think retail probably just doesn't know what to do. You have some people saying they're buying the dip. But I mean, the sentiment on this stock is changing significantly. And what they're reporting is not warranting sustaining the Trump rally. And I also am having a hard time accepting well, he's so close to Trump. I mean, that's fine, but that can also be a massive double-edged sword. I mean, really, he's politicizing himself very heavily. I mean, the fact that he's losing Starlink in Canada is something to consider. Europe doesn't want to buy his stuff anymore. Canada is probably not going to buy his stuff anymore. And, you know, what happens when he's done doing this Doge thing, gutting out the bureaucracies, right? I mean, now you have this, like, now real close interaction between him and Trump. And these are two guys who have, you know, very large personalities, to put it, you know, euphemistically. And I think there's problems. I think that you can have problems with this. And so I'm not very happy with this equity at all. I mean, if anything, probably just hold if you have it. But you know, I'm waiting for a lot more bearish signals. I think this goes back to before the Trump rally in a major way. So that's Tesla off 5.69% at 381.50. Let's see as well. You have Palantir cooking up with earnings. I really wish this were real, but this is totally a mistake on the part of TD Ameritrade. Maybe we're getting some insight. The Oracle of Schwab is telling us we're going to go 28.72% on earnings. But it's coming out with earnings later. This really needs to knock it out of the park, I think. I do have I like telling you guys what I do when it's something weird like that. I do have some leveraged ETF in that, not a huge position, but I think that they're pretty close to Trump right now. I think they can beat estimates, and this is looking relatively strong right now. So we'll see what happens with Palantir. Again, I think this valuation is absurd in reality. I mean, you're $181 billion, your PE of 416. I mean, that's why I don't have a massive position on it, but you know, I can see being in defense and being relatively close to the Trump administration could somewhat be positive for them. And I think they'll report a good quarter and good forward guidance, at least good forward conditions. So we'll see what happens with Palantir. That's another one that I would, like, if you want to take the risk, do it, but it is a risk for sure. And I think a lot of the industry is actually bearish on Palantir right now. I think the era of these super high market caps valuations, like, this is why I didn't buy the equity, right? Is kind of over right now. And the more that Trump kind of messes around with just the status quo of global economics, the harder these really highly valued companies are going to get smacked, you know, because I think people will probably get concerned about illiquidity, right? Now, again, I think the broader markets benefit from that. Dow Jones Industrial, composites hurt because it's very much tech, and that's a lot of what these overinflated companies are. But even SPY too, you know, or SPX, that sees cash inflows to some extent. Folks, Sarah, we'll be right back for a short segment right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You watch the Tom O'Brien Show. We have a short segment to go. You're in Palantir, man. Good luck. I'm saying that for myself, too. All right, let's look. SPX trading, okay, it's doing a little bit better. It's 6,003 right now. Trading up a bit, but still down, right, at 0.64%. Dow Jones Industrial off only about 0.17% for the day at 44,469. Russell, you know, obviously getting hit a little bit harder than everything, off about 1.18% at 2,268. And same with the composite, off about 1.08%. Dollar, somewhat strong, but really, you know, I mean, massive spike today. Right under 110, but you're at 108.89. What I saw was interesting was Boyle. Man, there's so much there was to talk about today. It was Boyle moving up natural gas. I'm assuming that's probably from the alleged tariffs from Canada on crude into the U.S., but I think that doesn't work for Canada very well because I'm not sure they can refine it the way that we could refine their sour crude. And then another thing I saw, which was pretty crazy, was the map for these pipelines into Canada. So it was Pipeline 9, they were threatening to shut it off or something like that. This seems like a major oversight to me. This is this red one going from Alberta into Montreal, right? This is kind of the big, that's Pipeline 9. It goes into the U.S. What? So you can't shut that off because you shut off Montreal. And so I guess at some point there was actually a proposition during Trudeau's tenure to just do this through Ontario, and they said no, which I think this is a massive, national security issue, I would say. And maybe they said, hey, it's America, what are we going to do? They're not going to do anything like that. But quite an oversight. So they're not going to do that. Even if they do tariff us on their oil or crude, I still think they get kind of screwed by that. And then, of course, we have the Sovereign Wealth Fund. We're going to put TikTok in it too, guys. Stay tuned. Who knows what's going to happen tonight? We'll see you tomorrow morning, 9 a.m. Take care.
Building